everybody, welcome to this edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Glad to have you all joining us today. Special welcome to those of you joining us from tradersarmy.com for our core market perspective. We're going to do what we do each and every day, take a look at the futures markets from a technical and an education standpoint, and also just take a look at some potential trades and turning points in the major markets. For those of you that are new to the channel, we look at the same 10 to 12 futures markets every day. Make sure that you click the subscribe button down below so that you do get notifications when the new videos do come out. For those of you that are not familiar with the weekend edition, we typically look a little bit larger time frames than we do on the daily edition, so we'll be diving in a little bit deeper today. I did not catch a video on Friday. I had one of those weeks last week where I had a bad day with recording software one day, and then Friday I had a bad day at the gym, meaning I just didn't get done in time to get everything up and going before the market opened up. And although we had a pretty strong run off of our breakout in the S&P, so that's where we'll start off. So the S&P tonight, we've opened up. We're about 8 points higher. Opened up right into our small time frame potential shorting area. So let's take a look at that as where we are. Now, this area, mind you, it's on a 15-minute chart. So this was found a while back. We've really got to go back in order to find this. We've got to really go back in order to find where this time frame was. I keep clicking on the wrong buttons here. And let's go back a little bit more in time. Let's do a... see if I can go back 90 days on a 15-minute chart. There we go. Okay, so we're really diving back now. We have to understand that we definitely had some changing of the guards, if you will, just due to the contract rollover, right? Our contract rollover has indeed occurred. So this may or may not be a level on your charts, but this was the area that we've identified. Now, I will say, coming into this area, we've come in with a fairly weak arrival, so not a tremendous amount of strength out of that. So if you are going to take this as a short, I would look at it as a candle-to-candle opportunity. So I'm gonna remove this, but look at it as a candle-to-candle style of trade, and maybe get short as we come out of here. My biggest problem with it is this area right in here, where we kind of had this basing before rallying into this region. Now, looking at this on more of a bigger picture time period, looking at this on, say, a daily chart, we are approaching an area on the S&P that could be a potential stopping point. So I'm going to remove this drawing that we have here. On the daily chart, we do have this area here that we need to pay attention to. We could get a reversal right in there, but we definitely have consecutive higher swing lows, consecutive higher swing highs in our positions in the S&P. So what am I looking for as far as a potential opportunity? Well, you know, you're going to be best buying on a slight pullback if we can get a pullback of any semblance, and that pullback would probably come in right in this area right there. That would be the pullback area that I would look for potential to get long if price comes back down into here. I'm going to change this, though, to a dashed line simply because we went up on fairly weak volume again. So we're continuing to go up, but we're doing it on weaker volume. That weaker volume is something to be aware of. Let's go ahead and look at the Nasdaq. So the NQ, we are back to our all-time highs. Hip, hip, hooray. The super readers saved the day for those of you that have kids. We are back above brand new all-time high, and there's really no resistance to stop us from trading higher. So looking at this on the daily chart, going to the smaller time period, if you want to get in on this, you're going to have to look at this area right down in here, which would be our very similar to the area that we just described in the S&P. Both of these had breakout trades earlier in the week that we had talked about setting up. And if you caught those breakout trades, you're probably still in this thing and maybe doing your happy dance. Looking at crude oil. So crude oil, we did not quite meet our entry point in crude, has rallied up off of this region a few times. Every time we come into here and base above it, I get less and less confident in this area. Just something to consider. I am interested in looking at this potential short off of this area right here, right there at 63. I think we could get a bit of a reversal. Now, I would be very cautious of this only because we've been to this region on more than one occasion, and that more than one occasion, definitely weakens it and lowers the probability of success. So keep this area in mind. If you're looking to, you can still run this thing long and probably get 10 or 15 ticks on a long from this area where we are right now. Looking at gold, I think that we're still in between two fairly strong points and fairly strong areas. There's reason to believe that we'll get a reversal at this area right in here, right around 1334, 1336. So keep that area in mind, but I'm not going to add it to the charts at this time. Looking at our bonds, bond markets are continuing their weakness, right? So my bond markets, we have a breakout short below this area right here. We've almost gotten it. If we get it right now, our stop would have to go above this pivot right here. Remember, a breakout, our stop's going to go above that higher pivot. So keep that one in mind. The Aussie, we had an area set up. Actually, I got to remove that line. I didn't realize that I still had that in there. We have an area set up way below down in this down here. Nothing major that we're looking at in the Aussie at this point in time. Maybe some areas up in here that might be worth a potential reversal, but I think we're getting a little breakout long out of this out of where we are right now. For now, I'm going to leave it be. There's really nothing I want to add to it. The euro, we had come off of this area from here. I'm going to leave these lines here, but I'm going to change them to a dashed line. Remember, a dashed line means we wait for price to come in, and then we look to take the trade as it comes out. It's lower probability, and that's because it's already been touched. Nothing really more to add in the euro at this time. Canadian dollar, we still have a breakout short below this 76.958 area. So if we get below here, that's going to be our short on the breakdown. Maybe, could look to a reversal at about this point here. Taking these, this area right here, potential reversal here. So just keep that level in mind. Looking at the Great British Pound, the Japanese yen, we've got a reversal point up above us. So we got a lot of lines drawn in the pound. The Japanese yen, we had talked about a potential breakdown out of this triangle pattern. The breakdown has occurred. So hopefully some of you were able to ride that thing and are continuing to ride it, and now have maybe take your stop and move it to right in here to lock in some profits. Copper, we've really got no levels set up to talk about in copper at the moment. We may want to look at this region right up here in copper as a potential for a reversal. Once again, the arrival into this area is going to be of extreme importance. And then our nat gas level, we had a breakout long on the nat gas. Price rallied nicely through there. We talked about adjusting your stop since it's gone up there. So we're going to remove the line at this point, and now it's just kind of chopping around sideways, so not a whole lot to add. So there's our weekend edition, if you will. One of the things I want to point out very quickly is just the VIX, our volatility index. So our VIX is sitting at 14.5. With the VIX sitting at 14.5, we're really starting to see volatility come off. We're still certainly not down back to our 10 range, but the VIX, after spiking all the way up to about 50, down now at about 14, we're almost back to a sense of normalcy to the VIX, especially with the markets at all-time highs. So I still think that this market is very heavily involved with inflation and interest rates, and so any knowledge of inflation is going to drop that market again, and the fact that we're continuing to rise on lower volume does give us pause for caution. So just keep those things in mind for longer-term investors. For traders, take the trades as the opportunities come up and give you good solid entries. If you've got any questions, please feel free to reach out. My email address is chuck@iiefinancial.com. I know many of you are managing your own finances, but if you know somebody who's looking for a financial advisor, please spread the word. We are willing to talk to anybody and see if we can help them in their financial goals. So thank you so much. I appreciate you guys joining us, and I will see you soon.